Hey there, it's Casey Dim at TaxSaleAcademy.com. Thank you for joining me on today's video. Today we're talking about buying tax liens as a way to acquire a piece of real estate. Now, before we dive into that subject, go ahead and hit that subscribe button. That way you don't miss a future training video just like this one. And also check out TaxSaleAcademy.com. All right, guys, so from time to time, people ask me, can't I just buy a tax lien and eventually own the piece of real estate? Well, the chances are you possibly could. It does exist, right? But what happens is it's not quite that easy. So if you're unfamiliar with a tax lien, here's everything in a nutshell. Essentially, you have a property owner who fails to pay their property taxes on time. The county auctioned off a priority lien against the property to a tax lien investor. In exchange for that tax lien investor essentially paying the taxes, they earn interest on their investment. Now, that tax lien has a redemption window. The property owner can step in, pay off the back due taxes, the delinquent fees, interest, all that good stuff inside this redemption window. If that redemption window expires, the tax lien holder then has the ability to foreclose on that tax lien and gain ownership of the property. That's it in a nutshell. Now, when it comes to buying a tax lien for the sole intention of becoming the owner of that piece of real estate, you must understand the odds here. Depending on the study and what you read and where you get your information, from 90 to 95% of all tax liens go redeem. Now, that's not necessarily a bad thing because that means that the tax lien investor is earning interest on their money. So it's not all bad. But that does go to show that only 5 to 10% of the properties actually reach the stage where the tax lien investor is able to foreclose on those properties. Now, if you do end up with a property that's in that 5 to 10%, the first thing you need to know, and of course you hopefully did this at the very beginning, you need to understand that your property value must be well and above the amount of the lien that is against that property. So if you've invested $3,000 in that lien, let's just hope that your property is worth a whole heck of a lot more than that $3,000. So if the redemption window comes and that lien is worth more than your property, well, you're probably going to be losing money. The second thing is you understand about that redemption window. It could be 2 years, 3 years, depends on the state. But during that 2 to 3 year period, you're going to lose a lot of other opportunities. We call this opportunity cost. You could be investing that money in so many other avenues, right? And then the last thing to discuss are the expenses that are involved in foreclosing against that property. Now, in some states, it's a very simple process. You turn in some paperwork, they give you a deed, no big deal. In other states, you have to send out notices for yourself. You or your attorney. You have to actually go through a judicial foreclosure process. It's quite a big deal. And when you get into all this kind of stuff, we have attorneys and courts and that kind of stuff involved, it can get expensive. So make sure that is factored in as well. So again, if your sole intention is to buy a tax lien in order to gain ownership of property, the odds just are not in your favor most of the time. And again, it goes back to 90 to 95% of tax liens get redeemed. You have to understand that the property value must be there. You have that opportunity cost, and then you have those expenses of foreclosing that tax lien. So if you want to invest in tax liens, my suggestion is that you invest in tax liens to earn interest on your money. That should be your priority, and that should be your focus. But if that redemption window expires and they don't redeem the lien in that redemption time frame, then you can foreclose and then hopefully make a lot more money than just that interest rate. But don't count on it. Don't buy a tax lien only as a way to acquire ownership of the property. If you want to do that, look at tax deeds instead. You can even do some OTC tax deeds. There's lots of money in that if you approach it with the proper strategies. So guys, I really hope this has helped you out. For more information on tax sale investing, check out TaxSaleAcademy.com. Click on that join button. Become a member of the Tax Sale Academy, where we have comprehensive training. We can take you step by step to show you how to get the success you desire in this incredible business. Hey, take care, folks. Bye-bye.